Good evening, everyone. Please, if you can hear the sound of my voice and you can see my screen, kindly indicate by raising up your hand. Okay, perfect, perfect, perfect. Thank you. So you can put down your hand. So today's session is going to be a very, very brief one. It's going to be straight to the point. So happy new months, everyone, and happy election. Hopefully, we have a nice trend due to the outcome of this election, because at the end of the day, regardless of our sentiments, all we want to do is make money. And pardon my voice, by the way. I have cold and stuff, so please pardon me. So yeah, let's jump into it. Thankfully, the outcome of this election is kind of favorable, because if we look at the previous time Trump was in power, we had a nice USD trend. So hopefully we get that this time. But we'll go to all of that. So this webinar is not about analysis and all of that. So let's just jump right into it. So I'm going to talk for a little bit. I'll take questions for a little bit and then we continue. So today's webinar theme is developing a profitable strategy, mindset in trading. All right. So my name is Shola, by the way. You should know this by now. So now let's talk about developing a trading strategy. Now, for the purpose of today's video, or let me say webinar, I'm going to be talking about swing trading. And talking about swing trading, we don't need to spend much time, because I gave an example of a swing trading strategy during our first webinar, right? So I just want us to do a quick recap before we dive deeper into the order of the day. By showing you, if you missed that video, the recordings is still available. I could tag that recording after today's webinar so that you can go rewatch it if you've not actually seen that video. All right. So I just want to show you a trade that I took with that same strategy I taught in our first webinar. All right. So I'll just go to my trading view. Once again, let me just confirm. Okay. So I'm currently in this trade. I mean, price even moved more than 1:1, because I put in these types of swing trade, I put on bigger risk, right? So that it's, at the end of the day, it's worth my weight and all of that, because this is more like a 1 week trade or stuff. So this is the trade I'm currently in, using that same strategy I taught in our first webinar, which was the dodgy candlestick. So, and where do you look for the dodgy candlestick? You look for this dodgy candlestick on the weekly time frame. And not just the dodgy candlestick, you also want to look for a dodgy candlestick that is happening at a premium level. So that premium level could be a support level or a resistance level, supply or demand, whatever you choose to call it, is absolutely fine. And looking at GBP Canadian dollar, we can see more than one dodgy candlestick form. Sorry. Let me pick up my arrow and highlight those dodges. This is one. Remember, when we say dodgy, you may be looking for the textbook dodgy, right? But in trading, we don't usually have that 100% textbook dodgy that we are looking for. But at least right here, if I zoom in properly, we could spot three. This is one, this is two, this is three. Well, I didn't look at this in the previous week. The one I spotted was this most recent one, which is this. So we got into the trade. By we, I think some of us are on this call right now when I actually sent out the trade. I don't, for their privacy's sake, I won't go to their DMs and or when I sent out this trade on Monday. So we took the trade. We are currently in. Price floated at some points today at 1:3. I'm personally risking 2% on this trade. So which means when price came here, I was floating plus 3%, plus 2%. But the point of showing this is just to show you the power of these dodges that I mentioned in our first webinar. Some people are getting it wrongly. I had a barrage of DMs. Even some people were pointing out the dodgy candlestick, weekly dodgy candlestick that formed on gold. And I was able to answer a handful. I wasn't able to answer all of them. So if you're part of those that I didn't respond to, please pardon me. Lots of DMs on this candlestick. So somewhere like there's a dodgy on gold. So is that a valid sell based on your first webinar? I mean, it's because of those people, those questions. I'm even doing a quick recap. So the point is, hey, we are looking for dodges that is forming at an area of value that has been tested, that price has reacted to significantly in the past. Now, if you look at gold, there's no historic data to back up the actually it's playing out. To be honest, let me even go to gold. It's actually playing out. It's not like it's not playing out, but we are doing it blindly because this is gold. On the weekly time frame, this is the dodgy from last week, and we can see that we are selling off this week. So which means it's still aligning with the idea of that first webinar. But I'm not just going to come here and say, okay, because it is playing out, yeah, that makes it a valid one. No, because if I zoom out my charts, there is no historic price data to work with. There's no historic price data to work with. So for those that I wasn't able to respond to and still took the sell, most definitely you are in a profit, right? You are in a profit. Yes, this is a valid dodgy candlestick. I think they call this I've forgotten the name. This is not a gravestone dodgy. I've forgotten the name of this type of dodgy, but any dodgy works, right? Obviously it is falling, it is selling off. But how about if you had done that around here and around here? You would have blown your money. No historic price data. And that is why if you missed last week's webinar, please go rewatch that webinar because I explained better in the first 10, 15 minutes about how this strategy works. So for those that are asking, it played out this time. Obviously, played out significantly, but you want to make sure that after selecting dodges, after spotting dodges, you want to look for the one that is happening at a premium level. So you want to sift enough to choose the best move. So why am I in that GBP card trade? Because with this dodgy, you can trade any currency pair because you don't get to see this kind of setups every day, right? So it is important that you look at multiple pairs so that you can always choose the best or the one you feel is the best. So why am I using this? If I zoom in properly, this is where the dodges are forming right now. If I squeeze out my charts, you will notice that, yeah, this is a valid zone that price has rejected significantly in the past. You can see how price pushed lower from there historically. So for dodges forming around there, this makes it a valid zone. If I even move further left, I could bring in so many levels into the fold if I want to. You understand? But this is a significant level that price has reacted to historically. So when you have a list of those dodgy candlesticks across all the pairs, you now want to look for the one that you can resonate with the most. All right. So it's more like a reversal pattern when it happens at a premium level. All right. So time will not permit me to dive deep into all of this. So if we have, I will just take a couple of questions, maybe one or two questions, then we'll move on from there. Please, if you have any question, just indicate by raising up your hand. Talking about the strategy, indicate by raising up your hand, then you'll be allowed to speak. And if there are no hands raised, then I'll assume that that's clear. So I'll just give like 5 seconds for that. There should be this icon on your up to raise up your hand. All right. So which means I've done a great job with that. So I'll just go on. Now, talking about developing a trading strategy, which is swing trading in this case, which we've talked about. I've given an instance of a swing trading strategy, right? Using the weekly doji candlestick pattern and then jumping in the next week and all of that. So let's go to the next slide now. Creating, testing, and journaling a profitable strategy. So number one, define your trading goals and style. Now, what is your trading goal? What are you aiming to achieve? What is your schedule like? Are you a busy person? If you're a busy person, you cannot scalp. If you have a busy schedule, you cannot day trade because you may be at work and just get lost in the work, in your job or at your place of work or whatever it may be. So define your trading goals and style. So if you have a busy schedule, then I think swing trading will be more suitable for you. If you have time in your hands, like myself, you can day trade or scalp. All right. So define your trading goals, define your schedule, then know what type of trading style you need to apply. So the next slide. Generate a rules-based strategy idea. Now, this may sound confusing because we have a limited time. This is just one webinar. I can't go through several trading strategies that is back testable, because at the end of the day, analysis is one thing, execution is a whole different ball game entirely. So let me even give you some ideas. So let's say you want to execute using a double top strategy on a lower time frame. Maybe your lower time frame could be double tops or double bottoms, of course, on the 15 minutes time frame, or on the 30 minutes time frame, or on the 1 hour time frame, or maybe even on the 4 hour time frame. So now you want to execute based on double tops and double bottoms. For instance, let's say that is a strategy you could come up with. Of course, you are going to lose some. But when you win, how big is your win? That's what makes you a profitable trader, correct? So let's say you want to use that simple double top, double bottom strategy. Now you want to have a rule behind it. So your double bottom could be, hey, after the break of the neckline, I want to wait for a retest. If I don't get a retest, I'm not going into that trade. If I get a retest, I'm going in. That could be your rule. Or maybe when there is a support or resistance level, let's say maybe use a daily direction to anticipate the next day's move. And now that next day you are on a lower time frame, like the 15 minutes time frame or the 30 minutes time frame. Then maybe you want to train RSI. That could be your rule to execute. Put down that rule. That's what you want to follow every single time. Now, when you have a rule, your rule is not going to present itself every day. It's not going to present itself every day. So now you know that, okay, cool. This is the only thing I'm looking for. We'll come to back testing later, right? We'll come to back testing later. So you know that, okay, this is the only thing I'm looking for. Each time I open my laptop or my computer or whatever, this is the only thing. If I don't get it, I'll keep waiting. Have a rule around your strategy. Then number 3, select a time frame and a currency pair. Especially if you're still struggling for consistency, go with one pair. Then build on that over time. Select a time frame. Select a currency pair. By time frame now, I'm talking about a time frame that you want to execute on, because I mean, if you do your analysis on monthly, weekly, daily time frame, you probably want to come to a much lower time frame to execute, maybe 4 hour, 1 hour, 30 minutes, 15 minutes, depending on your preference. I can't tell you what time frame you should. I could tell you what works for me, but I can't tell you exactly what you should do. So you need to figure it out and add it to your rules. All right. And when you must have generated your rules-based strategy, you now have a time frame or maybe a currency pair that you're looking at. Now you need to backtest it. This is one thing people don't do. This is one thing people don't do. Trust me, how do you? And that is why people, when you lose a trade, you're always feeling bad, you're always feeling hot, you're always feeling discouraged that you are not there yet. No, you could go into a nasty drawdown, probably a 4 losing streak or a 5 losing streak. But because you've backtested that strategy, you could project the long-term play of that strategy. You could spot the weakness in that strategy. How much trade can you lose in numbers? Is it 4 back-to-back losses, 5 back-to-back losses, 6 back-to-back losses? So which means even if it's 5 or 6 back-to-back losses, if I can win the remaining 4, I'm still going to end up profitable. That is how you build a strategy. People don't backtest. They downplay the idea of backtesting a strategy. And that is why when you lose one trade, you are all over the place, losing your cool. Use historic price data to backtest. I have done a couple of videos on backtesting using free tools. You can go back to my YouTube channel and watch these videos. All right. Learn how to backtest. Build a strategy, a rule-based strategy that you must follow, then backtest it to see how it has performed historically. Then if you like, you can forward test or probably just apply it on a demo account. All right. And while you're backtesting, you need to journal. So when you journal, if you see that, no, this strategy is good, but risk management wise is bad, you can refine, you can adjust. Maybe if your backtesting was based on 1:2, for instance, you now want to go back again and check if I had increased my win rate to 3-1, even after losses. When I'm winning, I'm going for 3-1. So how did it perform? You also want to observe that. So that is why when you are backtesting after generating a strategy, you backtest or forward test. Then journal in the process to see where you need to adjust that strategy, because strategy alone will mislead you. Strategy alone will mislead you. So you need to journal to be able to understand all the data available within your strategy. All right. So before I talk about common mistakes that traders make, let me see if so far we have any questions. So if so far you have any question, I see Mr. Ni's hand is raised. You've been allowed to speak, sir. Kindly tell us your name and where. Okay. I think you disappeared. Maybe that was a mistake. Okay. Go ahead, sir.
Oh, sorry. Yeah, actually, it was a mistake. But I'm listening.
Okay. Okay. All right. So if you have any question, just indicate by raising up your hand so that when I jump back here, I'll be able to see your hands raised. So I'll just give 5 seconds, then we'll continue. Okay, so in the absence of questions, so let's talk about common mistakes that you probably experience at the moment, you know. So let's talk about number one, lack of trading plan. Now, what is even a trading plan to start with? A trading plan is those your rules that I talked about from the previous slide. If XYZ aligns, I'm going to do this. If this, that aligns, I'm going to do that. So yours could be, let me use the example I've been using, say double top or double bottom. So if I don't spot, I have my zone. Now, if I spot a double top or double bottom, that's when I'm going to take a trade. That could be your trading plan. So lack of trading plan. I don't know if you're doing this for anyone on this call right now, but when I started out, I don't even know when to open my computer. I'll just open and just try to look for any trade I could see that makes sense, and I'll jump in. Now, if you trade like that, you're just guessing your way around the market. You're guessing your way around the market. So you need to have a plan. Like I always say, the mistake many traders make is this. When in real life, why I say real life is because we are not pushing buttons now. In real life, when you want to invest maybe 5 million of your hard-earned money, you do your due diligence, you do your research, like when you want to invest in a business, right? So you do your research, you analyze everything. You want to look at the downsides, the upsides, and the risk involved and all of that. But in trading, you don't do that. And you expect to be profitable in a $6.6 trillion market. A $6.6 trillion market. Do you think it's just amateurs that are involved in that type of market? Let's even ask ourselves that question. You are participating in a $6.6 trillion market and you are doing it casually. You just want to open your computer and just look for any setup. Are you kidding me? You think those candlesticks just predict themselves? Those candlesticks are price action. It's just a visual representation of price action. If a price of a commodity goes from $1 to $5, it's going to manifest as a candlestick. That candlestick is not just a graph that any mathematician just throws there. It is the projection of price, the movement of price. So that candlesticks we are seeing is just a graphical representation of what is going on in the market. If price of a commodity moves from $1 to $5, we are going to see the candle. And now you think you can just jump in and just randomly jump into trades. Are you kidding me? A $6.6 trillion market, or even if it's 4 trillion, even if it's $1 billion market, you just think with your $100, with your $10,000, you just come and do whatever you like. I think about it for a moment. It's a business. Hedge funds are trading in this market. Brick and mortar prop firms are trading. I'm not talking about these online prop firms. Prop firms, those ones in advanced countries, are trading in this market with billions of investor capital. So you just think you just come in and just do whatever you like. It's a business. You need to have a plan. You need to do your research by back testing. You need to treat it as a business. Now, another mistake traders make is ignoring risk management. Now you have a strategy that works. There you are jumping across different risk managements. Now, how can you gauge your performance over time? So today you are risking $1,000. Tomorrow you are risking $15,000. Next tomorrow you are risking $500. So for starters, as a beginner, I would advise that use a consistent risk first, then grow from there. So use a consistent risk first, which is have a strategy. Look at the 10 trading session performance of that strategy. Then risk maybe 1% or 2%. Now you are playing a numbers game. You are not looking at a trade by trade results and all of that. No. You understand? So risk management is very, 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 very important. Once you have a strategy without proper risk management, you're still going to keep blowing accounts. And I've always said this, when I say I can't blow an account, it's not because I don't go into nasty drawdowns. I still do. I'm human and I'm not the owner of the market. But I adjust my risk management accordingly as I go into that drawdown. And then when I start finding my footing back, when I start finding my feet again, I increase my risk management to reflect my performance. I could talk about risk management all day, all month, all week. But this is just a webinar. We need to go back to, we are very, very busy people. So I won't want to spend much of your time. All right. So the third on the list is unrealistic expectations and lack of patience. Now, unrealistic expectations, you're coming into the market with just $100 and you want to make $1 million. Whereas the people you're competing against, the very smart guys that even went to Ivy League schools to study this stuff, are looking for 20% the whole year. And you are looking for 500% within the shortest period of time. Trust me, if you are that kind of person and you are thinking that I'm lying, that is impossible if you are to do it consistently, tell me how far. How has been your performance? Yeah, you did it one time. Oh no, you did it 10 times. But were you able to withdraw that money? Okay, maybe you withdrew. But if you blow the other balance, you have to redeposit if you want to continue trading, right? Overall, how has that worked out for you in terms of profit? You put in $100 and you are targeting 1,000 within, I'm not saying it's impossible, but you are targeting it within a couple of weeks. You want to make 8%, you want to pass that prof within 3 days. All right. Set realistic expectations. Go with the flow. Go with your trading plan. Don't look at time. Keep time. Focus on your execution. All right. And once you have a solid trading plan that you adhere to your rules-based strategy, lack of patience jumps off the window because you naturally have that patience because you know exactly what you're looking for. All right. Then another thing is letting losses run and cutting profits short. So there's a simple trick I use for this. Hey, if I am risking $1,000 on a trade, the least I can close on that trade is $1,000. That is the least. But many of us, myself included, when I was starting out, is I could be risking $1,000, but when I see $700 profit, I want to take it. Forgetting that I could go into a losing streak too. So why not let my winners run also? So when you want to close an open trade, close at least what you are risking. Closing lesser than what you are risking, except maybe there's something special coming up like this election, the US election, and you just want to close your open trade in the minimal profit. That's different. But your normal trading routine, your normal trading day, if you're risking $1, make sure that what you are closing is at least one. Don't close below $1. That's not a proper risk management strategy. So letting losses run. Okay, another thing again is this. When we have our stop loss, we can wait for how long for price to get to our stop loss, but we lack that patience when it comes to getting to our take profit. Price will always go up and down. So patience is very, very important to be a profitable trader, right? So failing to backtesting is another thing that we overlook. That's another thing we overlook. when you come up with a strategy or whatever strategy you learn, maybe from my YouTube channel or from anywhere else, every strategy on paper looks profitable. Trust me. Every strategy on paper looks like the holy grail. You have to personalize it, because no matter how 100% a strategy looks, there's still discretion in it. Maybe where you need to put your zone, maybe your supply or demand level, or your support and resistance level. This discretion is you need discretion to be able to do that, because the market doesn't just move in a specific way. You understand? Today is printing this number, next tomorrow is printing the other number. So that's where discretion comes in. You need to know how to plot your levels. So if you can do that, once you have a strategy, then back test it. Don't just go on into your hard-earned money and start executing what you watched on YouTube. Someone say one moving average, if it taps on it, buy, and it looks so good, you back tested some trades based on that strategy, and you're like, wow. Trust me, when you go into the live market, you see that it doesn't work like that. Not because the strategy is bad, but you need to personalize it by back testing it, and of course journaling the outcome, so that you grow confidence to execute in a live market. So I'll go through this next couple of slides before I take the next question, if we have any. So if so far you have any question, just leave your hands raised. Now, developing a profitable mindset. All right. So I think we are nearing the end. So let me just take some questions if there are any. If at any point in time you have any question, please just indicate by raising your hands. I'll give 5 seconds for that. Okay. Mr. Esther Babatunde, you've been allowed to speak, sir.
Good evening, sir.
Good evening, sir. Nice to have you once again.
I'm grateful, sir. Thank you very much, sir. I want to ask, are you still in Kano?
Yes, but I'm traveling tomorrow.
Okay, back to Lagos.
Yeah, I'm going to Lagos and Abuja tomorrow, actually. It's going to be a busy day for me tomorrow.
Okay, I wish you a safe journey.
Thank you, sir.
Sorry, what I want to really ask is not really pertaining to this or something, but I've been trying to go to, I've not really get a resource or any material that explains on how to use average trading range, that is ATR, to determine the stop loss. So I don't know if you can bail me out, sir.
Okay, yeah. People always ask me that question about the average true range, which is the ATR indicator. But personally, I don't even use it. So I don't think I'm in the best position to explain, but actually I have an idea of how it works. The numbers are usually, my goodness, can I explain this? Let me see. The numbers are always around on your screen. Let me even look at I don't think I know how to use it, but let me try. Average true range. But if you know how to look at the numbers, maybe your major problem is just about I don't know how to use this, man. But the one thing I know is when they calculate the number, let's say, let me even delete this because honestly, I don't know how to use the average true range. Let me be honest. But let's say I want to get into a trade, a buy trade now. So let's say I want to buy here at this price. And then my stop loss is below the recent swing points, which in this case may be around here, this red line below. So that's my original stop loss, right? So they are now going to add the number of pips of the average true range to this original stop loss. So let's say price is trading higher, a higher low, a higher high, right? Then we want to buy after the pullback is complete. Let's say it comes back to retest here and it's now taking off. So now you know your stop loss needs to be below the most recent swing point, for instance, right? And then your entry will be where this upper arrow is. Now, the idea is I want to buy, so my stop loss is below. So now, do you know how they use the average true range to determine the stop loss? This is your original stop loss below here, below this most recent swing point here. So now they will now add the average true range to the original stop loss. So if your stop loss was maybe 5 pips by being here, and the average true range is telling you that you have 10 pips, you can now add that 10 pips to your original 5 pips stop loss. So that will now give you 15 pips, which means your stop loss will now come down below a bit, depending on how you calculate it. So that's how to use the average true range. But I personally don't use it. I've never used it in my life. So that's why, once again, I may not be the best person to explain how the average true range works.
Okay, thank you very much.
But as far as I know, this is how the few people I know that use this. This is how I know they use it.
Okay, thank you very much, sir. I'm grateful, sir.
You're welcome, sir.
Thank you, sir.
You're welcome. All right, so I'll take one more question before we continue. That's if there are any hands raised. All right, so in the absence of questions, so I'll just go back to the slide, and then let's look at developing a profitable mindset, because at the end of the day, you probably have had come across this idea that the strategy makes up just 20% of successful or consistently profitable trader, right? A mindset plays the bigger role. Of course, without mindset, you cannot be a successful trader, and without the skill too, let's say you have the skill, but you don't have the mindset. To be a consistently profitable trader is going to be difficult. And if you have the mindset, but you still don't have the skill, you can't make it work, right? So now let's assume you now have the skill, but you lack the mindset. Then what I'm trying to talk about now may apply to you, right? So developing a profitable mindset, which is popularly known as psychology. So number one, fear of missing out. Sometimes our rule, we ignore our rule. Let's say you were busy with something and your rule has played out, price has left you behind. It's already in profit. And you are like, okay, you know what? Let me chase this trade. Now you are exhibiting fear of missing out by doing that. Right? Just like a troll I have on YouTube from my last week's video. Remember in my last week video, I was projecting a bearish goal, and people came for me, not on just the YouTube, even in my DMs. People always come for me, though. I'm used to that. Well, on USD JPY, someone came for me, and when I analyzed what he was talking about, you didn't even follow exactly what I said. I said, put your stop loss below 151.394. So why are you telling me that you lost money? Your stop loss is not even there. Price has not gotten there yet. And look at today overnight, thanks to the US election, price has moved significantly. So which means your entry was wrong. I'm doing an analysis. The entry you entered on your own, you are not even my student, so you don't even know how I execute. You entered based on your own entry. So why blame me for your loss? All right, if you go, that's the most commented video in my last week's video. You see there, USD JPY. And look at how price moved today, significantly in a buy. So why are you blaming me? You entered and you put your stop loss, you didn't follow instruction. But that was fear of missing out. I now discovered that what happened to him was he entered based on last 2 weeks analysis, which is still valid with last week's analysis. Now, I'm using that as a case study here just to explain what FOMO looks like. Now, that last 2 weeks, I'm sorry, can you hear me? If you can hear me, just indicate by raising up your hand, please. All right. Thank you. So, I believe you can also see my screen. Let me just unmute Mr. David. Kindly let me know if you can hear the sound of my voice and you can see my screen. You need to unmute to be able to speak. Okay, I'll go with Selim.
I can see your screen.
Okay, perfect. Thank you. So I'll just mute everybody. I'm sorry about that break there. All right. So what was I even talking about? So fear of missing out was last 2 weeks, price opened with a gap up. My analysis was price is going to be bullish, but price now opened with a gap up. So why enter? I don't know what price was going to do when I said it's going to buy. I was correct about the buy, but it gapped up. So why not just wait for price to pull back to a lower level, then you buy? So you can't pin that on me, right? I gave you where to put your stop loss if you're buying, and price opened with a gap up. I do this analysis when the market is closed. I don't know how the market is going to open. Okay, let's take for instance Euro USD. Last week I was bullish on the analysis for this week. I am bullish. I gave a target, but when price opened with a gap up to that target. So what do? You can't take that trade anymore. You can't take that trade anymore. Price went up to take profit straight when markets open, thanks to the election. So you can't take that trade anymore. It's already invalid. Because from that point, I was selling off, and that was where price gapped up to and sold off. So at the end of the day, full instruction. So jumping in after the gap up, that's FOMO, fear of missing out. Someone said this, and now it looks like that, so I'm going to go in. That's FOMO. So don't let fear control your emotions, right? Then number 2, overconfidence and euphoria. Now you've gone through some winning streaks. Now you're overconfident. You just feel like, hey, do I even need to wait for my confirmation anymore? Let me just get into this trade. That's overconfidence. Now, fear of loss. This is another important aspect in trading. Now you are scared. You don't want to lose money. Now, when you think this way, it's because you don't have a working strategy yet. Because if you have a working strategy, then loss becomes normal to you. You know you're going to take some hits here and there. But over time, over a specific amount of trade, you are going to you're going to end up profitable. So you don't care if you lose anymore because you are executing within a rules-based strategy. So I think fear of loss is for those that don't even have a working strategy. You see an opportunity, you're scared to jump into it because you're scared of losing. And then price goes in your favor and you are like, "Whoa, price went in my direction." Then the next trading opportunity comes, you still didn't get in because you were scared to lose. then price moves in your direction. Then the third trade, you are like, I missed the previous two. I'm jumping into this. That one will now be the loss. So confusion everywhere. So fear of loss also prevents us from being profitable in the market. All right. Then revenge trading. We are all guilty of this at some point, right? You've gone into a loss. You can't wait. You want your money back. And like, once again, like I said, all this can be prevented if you have a rules-based strategy that you execute on. If you have a rules-based strategy, even after a loss, you know exactly what you're looking for next to execute. Because trust me, most traders around the world, most profitable traders, if you want to count individual trades, they lose more than they win. Out of 100 trades, they could lose like 60 or maybe 50. It happens. Most times you even get higher losses, but the winners are monsters. That's how they break even and make a profit. I'm not talking about those other people that will tell you buy here within 2 minutes. They are telling you to close. I'm not talking about those. Then they will post a profit of 1 billion naira. No, I'm not talking about those people. I'm talking about R&R. By monster trade, I'm talking about, okay, now that you're winning, how big is your win compared to your loss? Your losses shouldn't be bigger than your wins. Your wins should be bigger. Whether it's even 2.1 is at least, let's say you're risking 1%, going for a 2% reward. At least your reward is bigger. So when you're right, you are right times 2 of if you're wrong. So if you can have that, you focus on that mindset, your strategy, and revenge trading will be out of the window if you have that kind of mindset. All right. Then confirmation bias. I always talk about confirmation. Even in my weekly videos, I talk about confirmation. Now, confirmation is within your trading strategy. So for you, your confirmation could be double tops. For me, it could be maybe engulfing candlestick patterns, or based on the strategy I taught last week or 2 weeks ago. It could be, hey, I want to see a dodgy candlestick pattern on the weekly time frame. Then I'll go to the lower time frame in the new week to execute in that direction. Just like I've shown, I showed. I think I went into my chart. Yeah, I did in the beginning of today's session to show you a trade I'm currently in using that same strategy I taught 2 weeks ago during our first webinar. Right? So I have my confirmation bias. I have a requirement for that swing trading strategy. So I want to see this so that in a new week, I'm going to do that. And today price moved significantly. Let me take you back to that trade for those that joined late. All right. I'm talking about GBP CAD. I'm currently in this trade right now. All right. You can see how I used the previous weekly candle, the previous weekly dodgy candle that happened at an area of interest around here. The price has reacted so significantly to the downside historically. So coming back there, stalling, giving me a dodgy candlestick pattern. And in that last webinar, I couldn't talk about deeper stuffs because of time constraints and all. I did, after looking at all the currency pairs that had dodges, after selecting them, I also look at the monthly time frame analysis that's also been tested multiple times on the monthly time frame. And last month also closed bearish. So the tendency that we're going to go bearish this month is there. I also added a little bit of fundamentals. Oil and Canadian dollar moves together in a way, not 100%, but to a certain degree. I had multiple dodgy candlesticks. Even if you go to GBP NZD, I have it here. I have GBP NZD here. If I go to the 4-hour time frame, this was what I was looking at on GBP NZD. You see, GBP NZD is also in a little bit of profit already, but that was not my best. I looked at CAD and I was like, CAD and oil are tied. You can see how CAD dropped significantly today before bouncing up. So I'm still watching. Either way, price is still going to come back and retest this zone. So I could take profits around here because I'm putting enormous risk on this trade. I could still take profits around here, but I wanted it to bounce off, come back to retest here. Then see if it's going to create a new lower low. After creating this lower low, lower high, I want to see if it will create a new lower low. If it doesn't, if I see it bouncing off from here again, I will just take profit with those little interest on it. I'm okay because I'm putting in risk on this. Price came to 1:133. And when it comes to 1:133, me risking 2%, that's about 2.3% profit when it came around here. Sorry, here. Using that same strategy I thought 2 weeks ago. All right. So once you have a rule-based strategy, all of these things becomes easy. You know what you're executing on and all of that. So this is how far I can come tonight. And once again, this is the last webinar. I need to make this clear. This is the last webinar before our next mentorship program. I'm going to be doing this a couple of days before the next mentorship program just to add value. Everything is not about the money, right? We also need to add value. So if you want to be a part of it, you know what to do. But now is the time to take questions. So I'll just go to Telegram. If you have any question, please just indicate by raising up your hand if you have any question. Okay, I see Mr. Esther is still having some question. You've been allowed to speak.
Okay, thank you very much, sir. Number one, is the mentorship free for us? Hello, sir. I said the mentorship, is it free?
No, it's paid actually. It's paid.
Okay.
Yeah, but these webinars are completely free actually.
Okay. I mean, the one you said this is the last webinar you'll be having before the mentorship.
Yeah.
And that mentorship, that's what I'm talking of. I know that.
Okay, no, those are for paid students actually.
Okay.
Yeah, those are for paid students.
Then I want to ask, sir, how do you normally I use all this rejection and things like that to determine my support and resistance levels to mark them out into zones.
Okay.
But I don't know how you determines your own or things like that, sir, or so that at least I can get some or value.
I'm lost actually. So try to make the question simpler so that I'll be able to answer better.
I said most times when I want to determine my support and resistance levels or zones, so I want to mark out the zones. I said I use multiple rejections or things like that.
Monthly rejections?
That is not the rejection like that, testing a particular area many times. That's what I mean.
Okay, it's simple actually. To determine a valid support or resistance level, no matter the time frame you're looking at. Let's say you're looking at the 4-hour time frame or weekly time frame, whatever time frame. You need to look for a zone that has been rejected significantly in the past.
Okay. I use that.
You understand? Okay. What I'm saying now is this. Let's say this is a resistance level and this is a support. Or let me just clone this. So let's use this as this. Of course, we know that what is more like the floor, resistance is like the. So what I look for is zone that has bounced off significantly historically. Let's even delete this report here. Let's even delete this report. Price has bounced off significantly from this zone previously. That becomes a valid resistance. Right. So when price comes back here, expecting. Now, the reaction could go further below or eventually break above, but at least experience. That reaction is how we make money as traders. That reaction is how we make money as traders. Simple. We don't want to know, we are not timing the whole trend, the whole rejection, because we don't know what's going to happen over time until price creates a new lower low below here. When after it creates a, where's my brush? We're focusing on when price creates a new lower low here, which is below here. That is when we can say for sure that, hey, there's a change in market structure, right? But for the fact that price has historically rejected this zone, then when it comes back there, we're expecting a reaction. Now, how far that reaction is going to go, we don't know. We just want to make as much money as we can make based on the initial reaction of that zone. Let's take, for instance, let's use gold. If we go to gold last week now, how did I know gold was going to fall? Actually, I did on our thumbnail, I moved this zone here, but let me double click on that and limit it to the 15 minutes time frame so that it disappears. But on the forward time frame, if you go back to the analysis, how did I know that price was going to most likely fall into 2,713 or 2,685? It's because price broke below, went back, retested a resistance level that has been tested historically. Looking left. So for the fact that price did this, went back, I knew that, okay, at least, I didn't know it was going to fall to this point. I never knew. If I knew, I would have called it out. But I knew that at least there should be a short reaction, at least to this lower point here. As a matter of fact, I was even expecting a bullish move from here. Or worst case scenario from here. And that is why confirmations are very, very important. If not, you'll just be entering blindly or just place a pending order that will not play out. All right. So when you're plotting a support or resistance level, a valid one, you want to look for a zone the price has reacted to significantly in the past. Just like here. If we look at this zone here, we can see how price reacted significantly to the downside. So if price comes back there to use that zone, giving a solid rejection to the downside like this, then that tells us that, hey, price may most likely make its way to the next obvious rejection. Because if you look left, price reacted from here. And that was why this zone here was my next target in last week's analysis. Though price continued lower below that thanks to the election and all. But my focus was to look for a reaction between here and here. A lot of money can be made between these zones here. So we are only looking for reactions. We don't know the end product, but we are looking for a reaction. We want to act based on that reaction. That's all.
Okay, thank you, sir. Then I want to ask concerning the GBP card that you said you entered based on the strategy taught us, I think maybe 2 weeks ago. Last,
yeah.
So, Doji. I don't know, maybe you still use, okay, like you said, you use some fundamentals, but there are some of these economic datas, maybe macroeconomic datas that sometimes determines the move of the market. Because personally, I've observed over times, and I know is the fundamental that moves the market. Though you use technical to determine the extent or to
Yeah.
see where the reactions will be. But
Mm-hmm.
looking at maybe, for example, because I try to consider that AUD NZD, that's the one you use as an example, that time that you enter
Mm.
that trade. Okay.
Yeah.
And now look,
Yeah.
number one, when we consider the Australian economy is stronger based on
Mm-hmm.
the data that one is having, then NZD. Me do I expect,
Mm-hmm.
because before any move at all in the direction expected, you know that it will first of
Mm-hmm.
all go the other way around. Maybe it will
Yeah.
first of all sell. Now, because though I'm expecting based on that it will still sell. But
Mm-hmm.
what, I don't know, what can we do in that wise, sir? Or how do you align the two together? That fundamental and the technical using that doji something.
Okay. So
And
it's a.
sorry, sir, even if we consider this, though I don't know when you enter, or maybe it has started going in your own direction, like this
Mm,
GBP card. And for
yeah.
example, now, because I was trying to go through a kind of resource too, I think even
Mm-hmm.
yesterday on the fundamental.
Mm-hmm.
Though the GBP, I think we will having the interest rate. I forgot, I don't know the exact time. Maybe I will still check in
Mm-hmm.
Forex Factory for
Okay.
this GBP. For example, if they now cut
Mm-hmm.
the interest rate, what will happen, sir?
Mm-hmm.
If they
Okay.
cut the interest,
If they lower the interest rate,
yes,
so
it will
what will
automatically
happen?
compare. I mean, with GBP card, I don't know which one is stronger. Maybe
Yeah.
card is stronger than GBP or whatever. Present, I mean, using the macroeconomic data.
Okay. To be honest, especially as retail traders, of course, you need to understand what is going on in the market. Now, let me put it this way. This is how I do this. So, if on this trade right now, this particular trade right now, my stop loss, you will notice that it is 124 pips. The AUD
Okay.
NZD, before I took profits along the way, there are different reasons why I took profit along the way and all of that. So you will notice that if you go back to when we did that first webinar, after that webinar, AUD CPI came out positive, it spiked up,
Okay, sir.
but it didn't stop me out because this is a swing trade. So my stop loss was larger because it was obviously above a weekly zone. So it didn't stop me out. Spiked up, I was selling, but spiked up. Even the spike up, I was still in profit, even after it spiked up after the CPI. Sorry. I think it was NZD that came out first. Yes. AUD, I'm still talking about the AUD NZD trade. So came out, failed, price spiked up. Then AUD came out the next week and failed. So price now shot to the downside. So at the end of the day, you need to know what is happening fundamentally. But except you have inside that information, just focus on executing based on your strategy, because at the end of the day, we don't know 100%. We've seen cases whereby NFP will come out positive and price will still go the other way. How can you explain that? I mean, NFP came out positive, just go in this direction. Go in this direction. But no, because what we do basically is speculative trading. That's what we do. We speculate. Now, there may be a hidden transaction that has gone on. Maybe there's an importation from Japan between US and Japan. Maybe US is importing Japanese cars and US had to pay billions in dollars to Japan. The JPY is going to definitely appreciate regardless of the positive outcome of the USD news. So once in a while, this happens. Even though you see an initial spike, price will still correct itself and continue the trend. You understand? At the end of the day, even me myself, I've come to ask myself this question: how does this currency market, not just currency, how does the market work with world economics? Now, if you notice, a few weeks ago, Iran attacked Israel, and we already knew that Israel was going to retaliate. So, if Israel retaliates, Iran is an oil-producing state. So, if there's a war in that region, it's going to affect the prices of oil. So why is that war now happening at a major area of support? If I go to the monthly time frame, that's where we'll see the support properly. Why is that? This is the question. Sometimes I ask myself this question: is it that they just do this? Some people will just orchestrate this chaos just to fulfill technical levels. I mean, look at this. I've had these levels here. If you've been watching my video for just go back to the videos where I analyzed oil. You notice that I have this support level here. Why is it that it was within last month, because I'm on the monthly time frame, that spike up happened when Iran? Because this is a major level of support that has been tested multiple times. Why do we have war in that region now? Just so that price can push up. So sometimes I ask myself that question. So at the end of the day, to guide yourself against all of this, it's good to look at the fundamentals and understand, because at the end of the day, the more you know, the more edge you have. But me, I really don't even pay much attention on fundamentals. The only time I even look at fundamentals sometimes, just like this AUD card trade that I got into, was because GBP card, not AUD card. GBP card on the monthly time frame is at a valid
resistance.
What am I doing? It's at a valid resistance area that has been tested multiple times historically. Then going to the weekly time frame, I spotted my dodgy candle. And that was my reason to enter. So just focus on your execution, regardless of the fundamentals. Then you eliminate all those guesswork. What do I do? What do I look into?
Thank you very much, sir.
You understand? You're welcome, sir. Okay. I see results provider's hand is raised. You've been allowed to speak. Results provider. I noticed that your hand. Okay, yeah, go ahead, sir.
Okay, my voice is audible now.
Yes. Good evening, sir.
This is my
welcome
first
on board.
Thank you very much. It's my first time joining your live webinar listing program. Though I just joined this channel recently, anyways. So fortunately,
Nice to
let me
have
use thank you very much. Fortunately, I saw that you're having a web live today, so I just had to connect. I never wanted to do, so just that's what I wanted to say, nothing else. So though I didn't know when I clicked on raising on my hands anyways, but that's no problem.
Okay.
So thank you
You're
very
welcome.
much. Thank you very much.
You're welcome.
So that's all. Thanks
all
a lot.
Right.
Good evening, house. Good evening, everyone. Thank you. So let me go off. Yes,
okay, that's cool. That's cool. All right, Mr. Ola. Good evening, sir. You've been allowed to speak. So for you to be able to speak, you need to unmute yourself.
Good evening, sir. Can you hear me now?
Yes, I can.
Thanks for your effort so far. I was one that I chatted you on WhatsApp last week. Because up to now I cannot. I couldn't get you on Telegram. So what my question
what
is,
will happen if the Telegram doesn't work? Just use the WhatsApp link on the website, so that will bring you to our DMs. There's this WhatsApp. Yeah, if you go to our website, letstrade10x.com, you will see the WhatsApp icon. Just click on it. It will bring you straight to our DM, our inbox. So you just drop whatever message you may have there.
So my other question is for those of us that are indicated interest in the mentorship. What are other benefits that we'll gain in the mentorship? Can we have access to things like copying your trade? Do you give signals at times? That's my.
Okay, yeah. In terms of the essence of live session is we get to be together live. So when our trading opportunity plays out during the live, then we are just going to take it together. We're going to take it together. Then you also have access to the course, so that after the session, you still have access to the course, which you get to own for life. So keep you refreshed based on what you've studied during the live sessions. So all the information you see on the website about the... Okay, go ahead, please.
After the 2 months course for mentorship, are we still going to be in a group, or will be after we completed the 2 months course with the course that is available to us?
Yes,
and is there going to be like a continued assistance in terms of executing trades?
Yes,
you can get you can. With you.
Yes,
this will still be the group. Do you have a special group for?
No, there will be when you pay. There will be a special group. You don't have to be on the general group. So any question you get to ask, even if you ask it within the group or DMs, and I don't know why many people try to want to use the DMs. So instead of just asking in the popular group, I don't know why they do that. Maybe they feel like the question sounds funny or stuff, but it doesn't. So just use the group and ask the question. Even if we need to jump on a live after the 8 weeks, we are more than willing to do that. So there's always the availability to reach out to us anytime you want to.
Thank you, sir.
I don't know if I was able to answer that clearly, sir.
Yes, sir.
Okay. Thanks for your questions. So to reach us in our DMs, actually, once again, you can go to the website, letstrade10x.com. Just use if you are finding it difficult because of Telegram restrictions and all, you can just click on the WhatsApp icon. So that will bring you to us directly. Then you just drop your message there. You're welcome, sir. So I'll just take one more question before we call it a night. So I'll unmute Mr. Paul. You've been allowed to speak, sir. Mr. Paul. Okay. All right.
Can you hear me?
Yes, I can.
Okay. Thanks for the analysis so far.
Welcome, sir.
Yeah, I just want to confirm if it's only support and resistance you are using, or you also use demand and supply in addition.
Okay, at the end of the day, I get this question a lot. So demand, supply, support, resistance, they are just names. That's the way I see it. I may be wrong in your own perspective, but that's the way I see it. What is the zone that you think price will react to the most? That is the bottom line. You understand? That's the bottom line. So could it be demand, supply, support, resistance? At the end of the day, it's just an area of interest. We all have there are people, okay, personally, I don't use indicators to trade, but there are people that are doing fine. I mean, if you even look at most hedge funds and all of that, they actually use moving averages. Now, some people will be like, okay, if price rejects a moving average, they're going to take a trade. That's their own area of demand and supply, or support or resistance. You understand? So I've seen a profitable trader that use Bollinger Bands. But to me, it's crazy because I feel like, what would I do with Bollinger? But it's profitable, right? So at the end, yes. So at the end of the day, you see, this market is I always say this. I always say my students that, hey, forget what I'm teaching. This is just a starting point. So you can experiment. I don't enforce. Experiment. See what works for you. So some people, they will be like, okay, that their own definition of supply and demand, that's what works. Another person will be like, hey, my own support and resistance level, that's what works. Another person will be like, my moving average is what works. My RSI level is what works. So at the end of the day, just be flexible. Look for what works for you and execute within the tenets of that strategy, and you'll be profitable. Serious. Even as simple as, people don't know this, but even as simple as double tops, double bottoms can make you profitable. You know why? Because you now know that that is the only thing you are looking for. You're not looking for something else. You're not trading everything. You're just looking for double tops and double bottoms. So you know you're going to lose some. Some double tops and double bottoms are going to fail, if not most. But the ones that play out, did you wait for it to get to TP? If you can wait, even if after 10 trades, let's say you have a funded account, you've passed phase 1 and 2, and now you're funded 200K account, then you are still trading only double tops and double bottom. Even if you get just one, let's say you place 2 trades, the first double top or double bottom that you traded was a loss. Let's say you were risking 1:2. So the first one was a loss, which means you lost 1%. And the next one was a winner, which means you went back to break even and even made 1% profit. 1% on 200K account is $2,000, right? Even after taking their profit, blah, 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 you still be left with way over $1,000. So there's no strategy that is not profitable. But is that the only thing you're looking for? If that's the only thing you're looking for, at least now you now know what you're looking for in the market, and that's the only thing you come to the market every day to look for. You understand? Okay. So let's take, for instance, like the swing trading strategy I talked about 2 weeks ago. Let's say, okay, that's the only thing you're looking for. You're just looking for dodgy candlesticks that happens at a premium level, and you want to trade it. You now know that, okay, that's the only thing you're trading. That's the only thing you're looking for. So you don't need to stress yourself about the in-betweens, the other double tops, the other market structure, blah, blah, blah. You're just trading within one rules-based strategy. So you're going to lose some, you're going to win some. It's a numbers game. Because if you've noticed, you agree with me that there are many times whereby the trade we thought was going to play out perfectly is the one that is going to go and hit stop loss. And the ones we least expected to play out is the one that will make its way to take profit. And you'll be like, my goodness, I didn't take this. But the one you had absolute confidence in will go to stop loss. So at the end of the day, you now realize that it's just a numbers game. You're going to lose some, you're going to win some. But after 10 trades, how big is your win compared to your loss? Then you have a strategy there.
Okay.
Yes, sir.
Thank you very much for the
You're welcome, sir.
detailed explanation.
You're welcome.
Thank you very much. I appreciate it. God bless you.
You're welcome. Yes, sir. So yeah, that is going to be all about it for today's webinar, which happens to be the last one before our program. So the next couple of webinars will be coming up maybe ending of December or maybe around January next year. Meanwhile, my birthday is during the weekend though. 10th of November. So, thanks for tuning in. I really, really appreciate you taking time out of your busy schedule to tune in. Okay, I see Mr. Provider, Result Provider. You've been allowed to speak.
Okay, happy birthday in advance.
Okay, thank you, boss. Thank you very much. Yeah. Thank you. I appreciate that. So
there should be giveaway. I hope you will do that.
Yeah, definitely. Definitely. And that makes it right? That should be Sunday. The friend of mine is getting married on that day, so I don't know. Let's just see how it goes. Let's see how it goes. All right.
We'll keep in touch.
Yeah, thank you.
So my prayer goes with you. I have nothing to give you, but my prayer goes with you. Okay.
I appreciate that.
Thank you.
I appreciate you, sir.
Many prosperous.
So thanks for Amen. So thanks for taking time out to join today's live, and I appreciate you all. And I'm going to see you in our next live sessions, because we are still going to be analyzing charts. So hopefully next week is going to be about analysis. At least by then, all the dust of the election will be settling around that time. So I'm anticipating a bullish DXY, bullish dollar. I just hope gold doesn't fall from where it is, because technically, if we want to go by correlation, if DXY is bullish, gold should be bearish. But gold is an uptrending asset, so I don't think that should apply, just like Bitcoin and all. So I expect Bitcoin also to keep flying, or let me say crypto as a whole is going to keep flying. And I'll encourage us to invest in some stocks, or at least Uber for one, because it may not materialize within the next 5 years, but you may be doing it for your kids and all. So if you have any side chain, just put it there, at least between now and the next 10 years. My projection is 10 years with Uber, actually. I'm not looking at them becoming successful within the next 5 years, because every year they are always running at a loss. But the investors that are investing billions are not stupid. So I believe in the future is going to be a very huge investment when it starts taking off. So even if you don't do it for yourself, do it for your generations that you already have or unborn. Just put in something. Don't just put in all your life saving because I said so. Definitely not. Just put in a little few bucks into it. Over time, it's going to appreciate. So that will be it. So next week we are still going to have a live session, but that will be based on just analyzing the chart, looking at price projections and all. So once again, thanks for tuning in. And for those that are already that have already enrolled on the mentorship program, I'm going to see you on the inside from next week. So have fun. Good night, everyone. Bye.